to the Future Ventures podcast on Scaling with Clarity. Today, I'm joined by Emanuele Pizzatti, Managing Partner in Futurewave in Switzerland. Emanuele has spent more than a decade working across venture capital, family offices, asset management, corporate venturing, and impact investment with exposure across Europe, Asia, Africa, and North America. At Futurewave, he is helping to build a next-generation asset management platform focused on flexible investment structures, smart infrastructure, sustainability, and long-term capital allocation. He has also lectured on entrepreneurship and venture capital, as well as coached startups across Swiss and European innovation programs. Today, we explore how private capital needs to evolve in a world that is continuously shaped by AI, infrastructure constraints, regulations, sustainability, and geopolitical change. Emanuele, welcome to the stage.
Hi, Maxim. Thank you.
It's my absolute pleasure to have you on. It seems like over the last little while, we've had quite a few guests from Switzerland. I mean, Switzerland has always been the epicenter of finance and capital. And for clarity, I've lived in Canada for 30 years, but my brother and his family, they live in Switzerland. They've done the same. They lived in Switzerland for 30 years. So he works for a private bank there. And so I get a bit of a sense from kind of like what's happening in Switzerland on the banking side. But why don't we just kind of start the origin story, Emanuele? How did you get into venture, and how did you get into doing what you're currently doing?
Yeah, Maxim, that's definitely, look, after graduation, I had essentially two paths, right? One was diplomacy, and I withdrew my application. I was actually selected for a position, and then I went straight in post-incubation VC. That was back then was 2014, 13. Back then in my canton, which is the Italian one, so very tiny region. Spent there 3 years, right? And then I essentially moved to Zurich. After a little banking experience, I also have it. It's not surprising that a Swiss citizen in finance did not pass through a Swiss bank for a moment.
100%.
Yeah, that was a Credit Suisse, so entirely a different bank than the one that possibly everybody saw in the recent years. Yeah.
So, I mean, that's interesting. It's interesting that from very early on, you were determined to focus on this space. What are the origin stories of Futurewave? Tell me a little bit more about Futurewave and what you guys are working on. It sounds like you're working on kind of shaping, transforming the way that we think about capital.
Right, like I must admit, sometimes some partners are telling us you should focus more. All right, you should not really doing everything that you really like, but possibly focusing more. That's actually the situation we are in, because we are covering now, more than one jurisdiction. Actually, the idea of by the end of the year to cover 4 jurisdictions already.
Okay.
Exactly. So obviously on the plate there is a lot, actually. You can imagine. But Futurewave, also the name of the company, right, was essentially thought to bring something new into the investing ecosystem, right? Not only focusing on asset management, but also bringing something to the assets, right? So that can be around commercial development, for instance, or something that I think is quite unique in our approach is also the ability of supporting those assets in public affairs, so to say. Right? So we like governmental backed projects. We like to, support those companies entering new markets, right? So through joint ventures, distribution partnership, etc. And today, given that we don't necessarily like the VC model. Yeah, we like more strong balance sheet companies, infrastructure exposed, growth stage, right? So more infra, less VC. Just to
understood. And can I just unpacked a little bit more what you said. Can you give us the investment thesis? What are the 4 jurisdictions that you're currently in? Kind of like, what is an ideal company or project to invest in? I'm interested to unpack a little bit more of the what lies behind the investment decisions.
Yes, that's very fun question too. We can debate for hours, Maxim. I'm quite sure. And in fact, after COVID, the first investment thesis was developed, right? And eventually took shape, possibly in 2022 and 23, where we have eventually this market that was down, right? The VC was not as it was before COVID, right? So we tried to really re-engineer a little bit what a successful fund, right, would need to perform. So really DPI. So the key question was, what can we do to ensure DPI and quick also this? So obviously there was more attention to less assets, yeah. So really expose also ourselves like in C-level advisory, CEO shadowing when possible, and that really goes in the direction of let's improve top line of those companies. Right? What can we do here? And so the thesis was funded on that perspective. And then we added the pillar of, okay, the exit, right? Because that eventually is also necessary. So came without saying that for us was only B2B companies that are around infrastructure, right? So this already more solid balance sheet, so to say. And really the ability to, shape them specifically on the commercial development, including also public affairs, right? As an example, we can relate quite well with IFIs, the EIB that we have here, right? Or banks or institutions of the kind, right?
How big are the companies that you typically invest in? What kind of funding do you provide to them?
Yeah, so it depends now on the jurisdiction, right? Now we are, as you were also asking, we are covering Switzerland here, right, where we are essentially operating from. We have Liechtenstein, right, so not that far, right, but still is another country, and that's European Economic Area. Here we are looking at data centers. So that's, and here, look, there is so much now going on, right, not only on the data center itself, but also adjacent verticals, modular data centers, or even, power capacity, all of those things are of interest. Here we are more on the debt side, and we are really debating internally quite a lot, right? What is the gem that we want to take in terms of allocation, right? There are many theories. I think we are really coming down now relatively soon with the final thesis for this fund, right? Now we are already lining up the assets that we want to invest in, and that's just fun. Then we have Saudi coming up also. This is, although is in a joint venture scenario, so we are less involved, right? And that will be very much around water and agriculture. I remember somebody telling me, right, here we have a lot of oil, but no water. That's a solution. All right, so water infrastructure, agriculture infrastructure, those are good things. And then look, if we are not running overcapacity, we also have a Maltese dream, right? And that is more on green building. So here it's more equity. The other ones are more infra financing, and obviously when we can also take equity.
Amazing. And so those are 3 geographies. So Switzerland, Liechtenstein, and Saudi Arabia. What's the 4th one?
Oh, Switzerland. Sorry, it's Malta. Pardon. Right, it's Malta.
Malta.
Yeah, Malta.
Why Malta? Malta is a small island just off the coast of Italy.
Well, it's one might say so, but I can give you two main reasons. One, in winter time is a good place to go, but apart from that, it's also coming from one of our investors, right? So essentially, we had to take a decision in that sense. So, and I've been there. I like it.
Yeah, I mean, it's amazing. Like, we were in Switzerland. We've been to Switzerland many times because of the family, but we were in Sicily 2 or 3 years ago, and we were highly debating as to whether to hop over to Malta, just because we've had a ton of friends of ours that have gone to Malta. Like, this is amazing, like absolutely amazing. It's unique. Go visit. We couldn't make it work from a timing perspective.
Yeah, and it's not that small, by the way.
Okay.
Yeah. So that is, let's hit first the other two that we have ahead, and then maybe there will be also Malta. Yeah.
How much money there is behind you? Like, what's the fund? Is it the fund? I mean, the reason why I'm framing this question is because on one side you're doing the finance, and the other side you're doing the investing. So it's probably a bit of both.
Yeah, correct. But cannot really disclose everything here, specifically in public. But, just to give you context, right? We have the fund structures, right?
Yeah.
But then we have also practically non-structured wealth management advisory practice, if you like.
Nice.
Right.
And what kind of services do you deliver on the advisory sides beyond what you call public affairs? We would probably call it investor relations, but kind of like what advisory services do you deliver?
Well, I mean, they go very much hand in hand with the assets, right? When we look at a company or a project, we really try to look at ourselves. What are our capabilities?
Yeah.
Do we fit here, right? Can we support them in 2-3 milestones in their business plan, right? And most of the time, they go really in the direction of additional financing, so not, for instance, grants. There were some examples, right, that we did before, and practically including those companies and projects into publicly led programs. As an example, let's assume that the city of Munich, right, they need to do a few changes, right, on buildings, right, and then we do have the right technology company for the right project. Therefore, we're trying to advance those conversations on their behalf, right? So we use it. This is eventually cash flow security for those companies, improving top line. Exactly. Then we are happy to.
So we're working on a number of different projects in the Caribbean. As you know, a lot of the Caribbean states have aggregated on the CARICOM, and their top 3 priorities are waste management in that particular order, food independence, and energy independence. And we're looking at, as you can imagine, the Caribbean states are strapped for cash. So we're looking at PPP, like private-public partnerships, as the method, where the whole idea is we want to drive net economic benefit. The economic impact assessment has to drive a lot of positive attribution. We cannot disrupt the existing jobs that are currently in place. We have to be able to generate money. It has to be lower than what exists. And we have found some of these solutions. Would some of the funding that you're describing fit a project like that has if it's energy, it has a power purchase arrangement that is there for 20 years.
Those are things that we like for sure. All of them.
Okay.
We are not impact driven in that sense, right? But we do take care, right? We simply don't marketize as such, right? But I would say that we carry quite a lot of DNA altogether in impact. Waste management, lovely, actually. Energy for sure, and the only thing right now, we don't necessarily have a focus there, right, in terms of geographies, right? Right now, we are very much into Middle East and Europe, right? But if the opportunity is there, we're going to look at, right? That's
amazing. Yeah, no, there's definitely, we should continue outside of this conversation, but there's a ton of opportunity. Now, you're thinking differently about capital, like you describe Future Ventures as a Future Ventures. So it's similar names, Futurewave, we're Future Ventures. You're describing Futurewave as rejecting the kind of the rigid legacy model. What specifically is broken in traditional asset management today?
All right. Look, the specific VC model, right? Let's start with this one, right?
Yeah.
Now, also indirectly, we also had bad experiences, right, around us, right? But I think that, some of them, right, of funds today, right, not performing after COVID, they're still alive, right? So, technological shifts, that was a big hit. And also, if you like, today, with those two macro trends, the hormones and the AI, right, which is reshuffling a little bit the returns here on the entire portfolio, Maxim. So that's actually the condition. So what can we do here? Is possibly focusing on less, and really take care more about the assets. So that is why, if we touch something, we don't like to lose.
Of course.
Yeah. So
you don't believe in power law distribution? You believe in cash flow positive, return positive?
Yes, exactly. That's a good summary, Maxim.
I think more investment should be like that. I mean, obviously there's room for risk, because I mean the typical venture capital model is like you place bold bets, and some of them will work, some of them will not work. But I find that you talked about DPI. I find that a lot of the investors these days are like, I want something that I can get my money out at some point sooner rather than later. And I want to make money, and ideally want to make more money than I just put them in an index fund.
Right.
Yeah.
Look, I was just deviating a little bit. I was having this meeting some months back. There was this fund in private credit. And eventually, look, I was trying to understand the allocation that they have in terms of industry. And it turns out they had an exposure of 15% in SaaS companies. All right. Okay. So what is going to happen here, right? Because now AI might shift a little bit, might change a little bit the cards on the table here. And the answer was, yes, don't worry, we will tell those managers to shift the model from SaaS to pay per action, right? And when you have a very liquid fund, obviously this is private credit, so much lower returns, then you might see that there is kind of might be a problem, right? So, if also on the credit side, right, we are also looking at those things, you might want to have a solid underlying in VC, right? So again, we don't consider ourselves a venture capital at all, right? We really are in growth, possibly see ourselves that kind of the player that can bring those companies to private equity level. And again, if things goes very wrong, then there is a balance sheet behind, right? It's not software, so to say. So we do have really this mentality, right? So fewer, more attention, and solid. So we are also prepared taking less returns. That's okay.
Of course. Of course. And I mean, lower returns also means lower risk, and more predictable outcomes than higher returns, which means higher risk, and your likelihood of success is a bit of a crapshoot. Sometimes you win, sometimes you lose. I wanted to talk a little bit about something that you've coined. When you say adaptive capital, what does this actually mean for you in practice?
Adaptive capital.
Yeah.
So look, I think that this can be defined really, matching also the company plans, right? They might also be different stages, right? If I look, the very first thesis that we had was really having a play, having predicated the possibility of investing pretty much with almost every instrument there. So this, this financial engineering or engineering, right, is something that we have, right, inside. So we really try to think outside the box in that perspective.
Yeah.
And also, must say, obviously, if we are helping a company securing also additional grants, as an example, being included into a program, right, or securing a joint venture of the kind, ideally we would like to get awarded also there, right? So we also have a mechanism that eventually capture additional value by non-diluting also those companies. So, you are bringing 10 in sales, perfect, and then the company has another valuation also. So this is what we are looking at. So therefore, we always appoint an advisor to the board, maybe an operator, if we are lucky, at C-level. This is really what is inside the thesis.
Yeah. Understood. So, I mean, you're thinking very much similar to us in terms of kind of like what we're building. We're a little bit behind in terms of what you have built, but Futurewave appears to combine a fund structuring, advisory, direct opportunity. Do you think that will be kind of the future of private markets, less product, more platform, more ability to drive incremental value for, I wouldn't even call them investment because they could be projects, investments. Tell me kind of like, how do you think about the future and why this attracted you so much?
Yeah, well, look, we like to have options, right? Optionalities. So therefore, we already started, okay, we have a plan, a design, right? Therefore, we can actually develop also multiple things at the same time. So it's also diversification, if you like, right? And also we have, possibility of hosting, also other strategies, maybe we like them as well. And this is actually happening, right? We actually had quite relatively good demand, right, of those things, but we are not able to satisfy everything. You asked something interesting here. What I see in the future is definitely our industry is changing quite a lot, right? Right, there is this democratization, right, of deals right now. Accessibility is also granted to smaller investors, almost retail, right? There is the green fund, right? Evergreen fund as an example. So there are different options here. What I see now happening is possibly a polarization in the sense that you have very, very early stage investments or funds even. So, and this is around AI practically, right? Is quite right. There is quite a lot. Or you go really, really up, and then you have practically pre-IPO things. So what I think, and this is sad actually, that really what the capital in between availability is not going to be that much, in my opinion. And that's so if you go in Series A, well, you might want to be careful, right? So for us, we definitely look above that, but also we might also take in projects. They might be validated. For instance, there was a plant fully financed, operating. Maybe there is a second one, and we can go for that one only, right? So we like validation. Please.
So I want to make sure that I'm understanding. So you kind of mapped the journey of a company, at least from a financing perspective, like the angel, the pre-seed, the seed, the Series A, and beyond. Where do you see the biggest opportunities? Because like where the opportunities the most the risk, but perhaps the valuations are higher, kind of like Series A and post, or do you see somewhere else? I just wasn't clear.
Yeah, no. For us, it's actually definitely more growth companies. Also, we are not equipped, to look at pre-seed, seed data, for instance, in AI, where you have companies with 100x on sales, just to name one or not name one. But that obviously is not a startup. But still, we are not have the full capabilities to those assessments, right? We are not coders, so we are more operators, right? Management. That's where we come from.
Got it. No, that makes sense. Now, if I understand correctly, based on my research, Emanuele, you've spent quite a bit of time working with family offices. How should family offices think about private markets differently from institutions?
Yeah, look, that's a quite interesting question. And depends. Also, I would like to maybe contextualize one important point, because unfortunately in Switzerland we have different definition of family office, right?
Okay.
Because compared to America in that sense, right? Or US, because here, look, we have also a lot of wealth managers, right? Yep. So, hello? Yeah, Maxim, I think my connection went down for a moment. Are you still with me?
I'm still with you. You froze for a little bit, but you're back on. A little pixelated, but you're back on.
Yeah. Oh, sorry. No, I'm back. Yeah. Okay. So practically, no, I was saying that, we have a lot of wealth managers, right? So those are essentially private banks, right? So they have different logic in allocating into private markets. Mm-hmm. Because, eventually it is not under management, and they cannot intervene in your in the portfolio.
Yeah.
So this is very common in Switzerland, right?
Mm-hmm. Uh-oh. The dangers of live programming. We just lost Emanuele. Let's see if we can get him back on to continue the interview.
Hello.
You're back.
I'm so sorry. We were online, I think, right?
Yeah, we're online. We're talking about family offices, the difference between a traditional family office and wealth manager in Switzerland.
I'm sorry, something happened to my connection, but yeah, practically, look, here we have multifamily office, quite a lot, right? And those entities eventually do not necessarily want to invest in private markets. Mm-hmm. Because then, they cannot optimize the portfolio for the clients, right? Yep. So, despite possibly, the liquid side is very well developed, in my opinion, mm-hmm. The private markets is not really the case. Specifically mm-hmm. for private banks, then we have the family office, and that happened also that I've been consulting, right, or helping. And to answer your question, what they want, right? There is possibly a passion for thing, but also fit in the portfolio, right? Okay. This is people that we like to work with, and obviously there are other ones that they just like the IPO case. Yeah, so that's also good.
So back to kind of like what goes in the portfolio. What makes a private market the opportunity truly institutional grade before it starts to look institutional? At what point does it pique the interest enough of an institution to invest in a private market opportunity?
Right. What I see happening in Europe is one important factor, right, is actually that it's very much related to the geography. For instance, in France, maybe there is a sovereign fund, right, and they want you to invest there. Right? So this is in Europe is actually quite a lot. I think it's quite dry now, right? The fundraising market here, but so those conditions that are coming with allocators of the kind, right? But then there are also other ones, and in fact, like for us, right, also emerging, right, what we thought was, let's be an advisor first, not a full asset management firm, and therefore use practically a co-GP also, right, with institutional practically. So that's also what we did, and I would say that the partners that we have there is very good. Yeah.
That's amazing. I mean, like it's almost like I'm listening to myself, because that's how we're thinking about it the same way. A lot of I'm sure that is the same with you. Like we get a lot of pitches. I'm like, look, I don't know you, I've never met you, like how do you expect me to invest into what you're building? But if we have some form of a working relationship, whether it's on mentorship, advisory, like, then I know who you are, what you stand for. Are you doing what you say that you're going to do? Are you hitting the milestone? Do you have traction? It becomes a lot easier to invest in an advisory client than it is in like somebody you've never met, regardless of how lucrative or exciting the opportunity may look like.
Yeah, I can agree more here. And eventually, if I look back, right,
Yeah.
look, eventually you tend to look more the company that have been well referred. Maybe there is already somebody believing, right, and then you might want to add on that. So that's it. I think is how, also we have quite a lot of deal flow, but we don't have capacity to, unfortunately.
Okay. I mean, we live in a trust economy. Those, like a company that gets referred a lot means that it has a high credibility score, high trust index, and so you're far more likely to look at something or company or founders, somebody that has been referred to, say, hey, doing amazing things, go have a conversation with them.
Right. That's exactly what happens. Yeah.
Now, you talked about like smart infrastructure, AI, data centers, and your thesis includes this in terms of the financing. Why is this infrastructure becoming one of the most important technology stories of the next decade? And is this here now? Is it going to be here for the next 4, 5, 6 years until kind of the electricity demand catches up, or compute catches up to the demand? Kind of give me your perspective on this opportunity.
Yeah. So look, infrastructure has traditionally been an asset class, right? I think that the way that we are now seeing this ourselves is there is obviously a declination on the industry, right? And this asset class is there for a lot of years, right? So I think that if there will be some technological change, macro, right, that will be impacting satellite, nuclear, right? But then there will be other areas, right? So obviously you want to have expertise also in those domains, which we cannot cover ourselves, and therefore we need also to even get very good referral, right? Or that eventually can advise us on that. And that's also why we wanted to partner up with strategies, because eventually we can source also these capabilities. But again, our way of looking at businesses is really self-assessing, right? Can we add value? That's really the key question, right? Because then we can improve our returns, right? So we didn't build entire thesis on that, but yet that's very important.
And are you purely looking at Terra opportunities or Terra plus space?
Look, depends, right? Look, right now we were looking very much into an opportunistic one. Now we think that we have to go a little bit, more solid, right? So now, in fact, the debate we have is, shall we prioritize a little bit this one that is more expansion, right? Or so. It depends, I would say, and also it will depend also on the strategy. Now, I'm very much focusing on Liechtenstein, what I'm actually commenting on. Saudi, as an example, will have something different, right? That will be, we will not intervene much in the investment management decisions, but
I understand. Makes sense. So AI is often discussed as a software, but the bottlenecks are really more infrastructure wise, be it like, or physical, tangible, like kind of like how much power. Like, can you build a power plant that would generate electricity to power the data center, or cooling, or chips, or powered land, or interconnection to the grid capacity, like ability to match peaking demand. But how are you thinking about AI as an infrastructure investment team?
Oh, don't grill me, huh? No, well, the AI for us is the software part, right? But then we have the enablement of that, right? And this is starting from the data center to all the channels, and those are things that we can eventually look at. But AI for sure is impacting so much everything, and it will continue to do so. So I think that for the first time, there are some sector where we are not into, right, like us. But I think it's not. It's more challenging now to predict where you are going to go. And that I was referring also before on those VC funds that were a little bit challenged after COVID, and now possibly because now the underlying portfolio, the quality of the company is much different, simply because there are those macroeconomic changes, and those are big. So for us, the way that we look at it, okay, let's again look at the balance sheet as well, right? Are there hard assets, right? Then eventually can be used or can be used elsewhere also, right? This is so obviously, the tech standalone per se is not for us.
Understood. I just wanted to unpack this a little bit more. Where do you see the best risk-adjusted opportunities around data center? Is it the build out of the facilities themselves, the power plants, the kind of power the data centers, cooling, grid technology, edge infrastructure? Kind of like, where do you see the best risk-adjusted opportunities?
Right. Look, that might also have some geographical differences, right? Because I was actually discussing today with somebody in the Netherlands, and obviously they have a very big problem with the power supply, right? So obviously, if you win a contract of the kind to bring efficiency, right, or to do more with those companies, right, that is possibly good, right, for certain markets, right? Then, if you ask me, that's what I like is modular data centers. Right? The asset quality might be even better. You don't have the construction time. They might, those are important capex. You might have less capital intensivity, and then you can also resell those assets, right? So
pick them up home.
Same. This is possibly because another part of me, right? Are we not oversupplying very soon? Because come on, I mean, in Europe, nobody. I never had a problem with data capacity. For power computing myself, but of course I'm not. Very interesting times.
There's specific law. I forget what the law is called, but essentially the premise is that the more something becomes ubiquitous, the higher the demand becomes. And so the whole premise behind it is that it's kind of like it almost kind of like the network effect. Is the more people have it, the more people want it. So the more people have AI and are able to use it and make something out of it, the more people want it. So that's kind of the premise behind like this. But I've talked to a lot of industry analysts and researchers, and just same thing. Like if you remember in 1999, there was a lot of fiber optics that was being laid down, and then for a period of time we had dark fiber. Right, nobody was using it. Now, if you kind of look at the industry signals, that doesn't seem to repeat 99 in terms of the dark fiber situation. So at least the pundit, the industry researchers saying that this is different, that the demand will grow to satisfy the supply.
Yeah, no, definitely is similar, right? I mean, but who knows, right? Right now, look, the market is bully, right, on this. Demand is there, right? That we it's a clear thing. So yeah, look, obviously staying in mega trends, right? Specifically when markets are unstable is also good, I would say.
So, Emanuele, I'm just kind of going back to the 4 jurisdictions that you're in. Saudi Arabia, I mean, to use your words, like public affairs. Saudi Arabia has done a phenomenal job in public affairs over the last 10 years or so. But it's, at least to a Western investor, that's not the typical geography that would come to mind when looking for opportunities. Like, what led you to open Futurewave Riyadh? Like, what led you to look at Saudi Arabia as an opportunity?
Look, I might have a slightly different vision here.
Okay.
Because, being there, right? I've been there last year multiple times, and that is very vibrant, actually. Also, from new companies and projects of a lot of quality, actually, a lot of quality in many sectors. I remember meeting some SaaS companies, even, right? Very good, very good. So there is definitely a market, right, in terms of tech supply, right, that is growing, but also there is also, I would say, an alignment with the vision of the kingdom 2030, right?
Okay.
And this is really, you really feel it. All the businesses are really committed to prove that, right? And so, it's not only, it's very welcoming, actually, right? And I think that there is a lot of opportunity, specifically also for the sectors that we are in, right? That we will be in, because, we are really in the early phases, though. But agriculture, right? It's a need. That GCC in general, they are importing a lot of food, right? So they might need to have a solution for that, right? And water is something that we start liking way more and more.
Makes sense.
Yeah, please.
I was just going to say, I know that we're coming onto time, Emanuele. I mean, this is a fascinating conversation. I do like to end my interviews with a choice of questions. On one hand, I would love, and you can choose which one to answer, but what's the kindest thing that anyone has ever done for you, or what's the best advice you have ever received?
Wow. I receive a lot of advices, actually.
Okay.
And, and I also had the opportunity of being mentored also.
Okay.
Or, as a good example. So, person, right, that's the right way. Thanks. Yeah. So, right now, I must say, I don't have one in my mind that I want to share, right?
Yeah, that's okay.
But there were many situations, and I promised myself that I will write that to you. Maybe that will be also useful for you as well.
Absolutely, no, that'd be amazing. Can I then just ask you, how did you go about finding your mentor or mentors?
Oh, look, it just happened, actually, right?
Okay.
It's not, and generally, it's somebody that is teaching me indirectly or not, right? And then, okay, I want more knowledge, right? Please stay with me, continue the conversation. And then obviously you have to be aligned on a few things, right? So, and in fact, I must say, some of them are actually my partners today.
Amazing. Is LPs?
Yeah, exactly.
Amazing. Yeah. Another example of trust. Anything else before we close off the interview?
Look, Maxim, I think you and I, we have to take some time aside for us, right?
Yeah, 100%.
Let's plan that. But thank you so much for having me at your show. And I'm looking forward to connect. Thanks.
Absolute pleasure to have you on.